Chapter Loans and Advances. Under this, we will going to study principles of sound lending. Objective: to identify the aspects of a sound lending policy followed by banks in India. Now, let us see what is lending. Lending is one of the primary functions of a bank. The bank accepts deposits from people and then lend that money to the needy people in the form of loans, advances, cash credit, and overdraft. Interest received from these lending is the main source of income for the bank, so a bank should examine the security offered against loan, creditworthiness of the borrower, and the purpose of the loan. Therefore, a bank uses following principle for smooth running of the business. The principle of lending are: we have safety, liquidity, profitability, spread, purpose, and national interest. Now, let's learn the basic principle of sound lending in detail. Safety. As the bank lends the funds entrusted to it by the depositor, the first and foremost principle of lending is to ensure the safety of the funds lent. The repayment of the loan depends upon the borrower's capacity to pay and willingness to pay. So, if he earns profit, he can repay the loan promptly. Otherwise, the loan is recovered out of safety of tangible assets. Therefore, the banker should give a loan to a person of integrity, good character, and reputation. Next we have is liquidity. Banks essentially give loan for short-term requirement. They lend fund for short period and mainly for working capital purposes. The loans are largely payable on demand. Therefore, the banker must ensure that the borrower is able to repay the loan on demand within a short period. Profitability. Commercial banks are profit-earning institutions. The nationalized banks are no exception to this. They must employ their funds profitably so as to earn sufficient income out of it and to pay interest to the depositors, salaries to the staff, and to meet various other expenses, and also to distribute dividend to the shareholders. That is to say, the sound principle of lending is not to sacrifice for the sake of higher profit. It means that the bank does not grant advances to unsound parties with doubtful repaying capacity, even if they are ready to pay higher rate of interest. Next, spread. To minimize the risk of NPA, that is non-performing assets, and to ensure the safe and timely return of the loan amount, bankers need to advance funds to borrowers belonging to different sectors through diversification. Tangible assets are valuable and the banker feels safe while granting advances on the securities of such advances, yet Some risk is always involved. So, a prudent banker always tries to select the borrower very carefully and takes tangible assets as securities to safeguard his interest. Purpose of loan. While lending funds, the banker inquires from the borrower the purpose for which he seeks the loan. Banks do not grant loan to each and every purpose. They ensure the safety and liquidity of their funds by granting loans for productive purposes only. Therefore, banks should lend funds towards productive purposes like trade, commerce, industry, agriculture, and so on. Next is national interest. The bank should give loan to borrowers belonging to various sectors of the Indian economy. The main aim of this principle is to bring about balanced growth in the country.